stroll the old town square, and the good life is in store.
I got to tell you something. I think this theme song really worked because, you know, from July of 2013 to July of last year, The Villages, the fastest growing metro area in the entire country. Look at that at the top of the list. It's not the only one. Every one of these were in the top 22. These are all senior living places, and they're all over the place. For instance, there's a $77 million, they call it the Belfour Complex, being built in downtown Denver. It's got a 24-hour concierge, gourmet meals, a penthouse bar, and there are 20 others just like it springing up right in the same area. Now, the problem is right now, unfortunately, is that too many people currently in the workforce can't even dream of balling like this in their golden years because look at this. Only half of them think they'll have enough money to live comfortably, not even like big, you know, driving $25,000 golf carts. Like anything else, if you want something in life, you have to make it happen. So what actions can working people do right now so that they can live in comfort, or let's take it to the next level, live in a hot senior community? Is it too late to do it via the stock market? I say absolutely not. But the panel may have other ideas. Let's find out. All right, guys, The Villages. I got to tell you, Googling that, man, there's some great, great stories. So what do we do right now? Well, Paul, you've given some speeches down there. The average person right now, 40 years old, forget about living on Social Security. They want to go out there and they want that $25,000 golf cart chilling on at the Villages. How do we set that up?
Well, you know, I think the stock market is the place to be because as you start seeing people becoming more and more middle class in Asia and other places, they're going to be buying more and more of our products. You're going to see an economic expansion, which is going to drive earnings over the next 10, 20 years. And I think we're in for a long-term secular bull market. And yes, we will have bear markets and recessions, and you just got to live with them. But it's going to be up like we saw in the 80s and 90s during that period of time. You've got to stay in the market, and I think
ride
that's
out
the
these
key.
bumps in the road. What do you think?
Exactly.
I think that, well, of course, number one, equity investing, but also be very discerning. It's very easy and tempting to give money to your children, to private school for your grandchildren, for pre-K. And there are all sorts of things that seem to be important, but you have to measure that with taking care of yourself.
You're saying think about yourself instead of these ingrates that after you put all that money in them, they're not even going to call you, but once a year maybe send you a card?
Exactly. And it would be a lot more fun to be able to play shuffleboard and, you know, golf and all that. What are they, bowling down there?
A lot of other stuff goes
Here's
on.
what I would do. Yeah. Right now, I would definitely be 60% stocks, 20, maybe 10% hard assets, 10% bonds. I'm not a bond guy. I know you like bonds.
Well, no, hold on. No, for a trade.
Okay.
But in this scenario, there are wonderful ways to build income growth portfolios. In other words, you start with a base and you look for income, and you want certain stocks that their dividends or the income from these investments are going to go up with time.
Solid blue chip names.
But not just blue chip. There are a lot of great companies that pay dividends. There are a lot of great REITs that pay dividends. And build yourself something that's going to continue to grow and monitor those pieces in diversification. Because income is more important than just assets.
I think there's two words, early and often. You want to start as early as possible. If you're 40 years old now and you haven't started yet, start today. Or start yesterday, actually. And often, consistently put money away, every paycheck, every month, whatever it may be. Not only your 401k, but into another retirement account. And just keep getting into it. And you will be amazed in 5 years. It's like going to the gym. The first couple of weeks, you're like, my God, nothing's going on. But then after a while, you start seeing results. Same thing with the stock market.
Isn't it about delaying gratification? Because so many people now aren't willing to do the saving. And the other thing is, I hate to be the party pooper here, but we've got to remember that the retirement age has to be pushed back because we're going to live longer. So we're going to be going to these places a little bit later than some people might be thinking.
I think at the Villages you can start at 55, although I read a story about a wayward 49-year-old. We'll talk about that later.